We're an aging, slowing economy, and we need those type of people to come here with new ideas, energy, spirit, that are willing to work.
Hello and welcome to a new episode of Coming Clean Podcast. This is your host, Peter O. Estevez. Welcome to episode 73 with none other than Rob Luna. Hello, Rob. Welcome to Coming Clean Podcast.
Hey, how you doing, Peter? I'm super excited to be here with you today.
Thank you. Thank you for joining us. You have a very impressive bio, Rob, and you've been featured in many national publications. What an honor to have you here with us at Coming Clean Podcast. 20 years of experience in the wealth management industry. You an on-air contributor at Fox Business. You can be seen on that network on Making Money with Charles Payne on a weekly basis. You're also a regular guest at CNBC and other financial networks. You've been featured in numerous publications such as Barron's, Wall Street, and Wall Street Journal. In January, Rob sold the majority of his interest in SureBest, the wealth management firm he founded, from a spare bedroom in 2001 to CI Financial, the largest non-bank publicly traded financial company in Canada, for an undisclosed amount. Rob, what a plethora of accomplishments.
That sounds like me, but I still, people like yourself and a lot of other people that I meet on a daily basis leads me to believe I'm still in the second or third inning. So I got a long way to go, but I appreciate the acknowledgement.
And you're also a graduate, MBA graduate.
Yeah, I've got two MBAs. Actually, I did one in Singapore, the National University of Singapore, and I did one at UCLA Anderson.
Wow, incredible. Well, now that we're here today, tell me your outlook with the new administration. How do you see the country coming together, or do you see the country coming together under the new Joe Biden administration and Kamala Harris?
Well, I don't think the country could get any further apart than we've been really over the last, 4 years. And, it's not really a political statement or anything like that, but I think there's been such a polarization of, certain things under the previous administration where there really wasn't that outreach to people. And I think, when you look at where this country has gone over the last 4 years, I think we really need, as President Biden says, to start healing, coming together again as a people. I don't have a huge amount of faith in politicians to really be the ones to do that. But, that's definitely my hope, at least, is that we start to see, more people coming together. Some of the things we've seen in terms of, racial wars and those types of things. I grew up in LA during the Rodney King riots, and, I thought we would never see a situation in the United States quite as bad as that again. But, some of the things we witnessed just down the street from me on Rodeo Drive, 3-4 months ago, very frightening. And I'm hoping we can come together as a country and start to heal again.
And you said something that is very interesting. You don't have a lot of faith in politicians. And the reality is that politicians should only be order keepers and policymakers. And it is up to us, the entrepreneurs, to continue to create and develop industries, jobs, prosperity, and everything else. And we the people have control of the country, and it is so it really baffles me to see how people lose focus of that so quickly.
Yeah, no, I absolutely agree, and I think that's in terms of one of the things, like him or not, President Trump. I think the fact that he was on Twitter every single day, really dominating headlines. I think to have that kind of dissipate and see the voice of the average person become a lot more prevalent, I think is going to be a lot more important. And that's one of my hopes under Biden, is I don't think he's going to be out there quite as much. I don't think he's going to have as heavy of a hand of what's going on in the media. I do something for Fox Business every Friday, and those of you who know Fox, we played quite a bit of Trump. So I think that's starting to dissipate, and getting more voices out there, more opinions, ideas, I think is something positive in general for the economy.
There's 4 major things that had happened in just a few days of the administration, and one of them is the possibility that they're going to ease up policy with China.
Yeah.
What do you think about that, and where do you see that going, and what impact is that going to have in our economy again?
Well, I think one of the things, if you look at the Chinese economy, it's second largest economy in the world. They've got almost 1.4 billion people there. They have the largest rising middle class in the world. So it's a very, very important consumer. And so when you look at what was going on with trade policy under Trump, Obviously, there was a lot of saber rattling. There were some tariffs that were put on there. But you look at just that economy in China coming out of COVID, they've actually responded a lot faster than we have. Now, let's keep in mind, they're a communistic country, so they can lock people in their house for a year, do the things that, as a democracy, we don't necessarily have all those tools, but they have been accelerating. Their economy has been growing much faster than ours. And you look at globalization, and you look at, let's just say, the S&P 500 alone. Now, the S&P 500, the US stock market, a lot of people look at that as the US market, but nearly half the revenues of the US companies now are coming from overseas. A large part of that is dependent on China. So tariffs and those types of things, I think long term are not sustainable. We need to be able to have free trade with China. But as President Trump said, it needs to be free, it needs to be balanced, it needs to be fair trade. We can't have our intellectual capital continuing to be stolen, those types of things. And so, having spent, as I mentioned, I did one of my MBAs in Singapore, and I spent about 2 years in China, in India, in Asia. A lot of that was to get a better understanding of the Asian economy. And as you know, when you do business, Peter, it's not just quantitative, it's qualitative, understanding people, understanding cultures, and how that's done. And I think one of the things, having spent time over there when Trump was coming into office, that the Chinese actually respected was the fact that Trump did take that hard line, because that's the way they negotiate over there. And so I think too soft of a stance doesn't get anything done, but tariffs isn't necessarily the way to go. The question is Biden able to kind of bridge that middle gap? Are we going to go back to where we're just completely taking advantage from China? Or can we start to open up trade on a more level playing field, which is actually beneficial to the US economy? That remains to be seen still.
Now, there has been the impression, and we obviously have seen it in the economy, that a lot of the jobs, a lot of the manufacturing, and a lot of the things that went on and went to China for a long, long time have come back, and a lot of manufacturing kickstarted again in the US. Do you believe that opening up trade policy with China is going to have an impact and we will lose those shops again?
There's a potential that you see that happen. That being said, I mean, we're a service-based economy, Peter. You don't really go backwards and we're never going to go back to the Industrial Revolution again. And so I think really what's more important is that we are able to export. I mean, because I think the US population is 300 and something million. You look at places like India, 1.4 billion, China, essentially 1.4 billion. In terms of having a global playing field, which really, like what we're doing today, Zoom, the internet, this digital type of economy has really allowed someone to start a small business in the US and trade across the world. To me, free trade is the most important thing. Manufacturing in general is not going to be large enough to change the US economy. It really comes down to free trade, opening up the rest of the world, and educating people in financial literacy, educating people in entrepreneurship. The jobs of yesterday, I talk about all the time, coming out of high school and going work for General Motors on the assembly line, collecting a pension fund. Those days are gone. Pension funds are gone. Lifetime jobs are gone. It's really about globalization, but also educating the US entrepreneur of how to be able to compete on a global playing field, just like our large US corporations do on a daily basis.
Another very controversial point that would ultimately have an impact has been the Mexico-U.S. wall, which President Biden has suspended. Two questions in that, Rob. What impact is that going to have, the suspension of the wall, in the creation of jobs, in the influx of illegal immigrants to the U.S., and what impact would it have in the U.S. economy and in the Mexico economy?
Yeah, I mean, I don't think really necessarily the wall going up had a major impact on slowing the economy down. For a long time, and I'm sure you'd agree, Peter, this country was built on immigration, but what we need to have is an easy, clear, and free path to legal immigration, right? And so I think putting up a wall, really, quite honestly, I don't know. I never agreed with that, especially the fact when you looked at what was happening and some of the risks that people were taking trying to come across from Mexico. From a humanity perspective, I didn't agree with that. And look, at the end of the day, I'm in California, where the majority is a Latino community. The majority of that is the Mexican population. Without those people here, who for the vast majority of are hard workers, doing the jobs that a lot of Americans don't want to do, our economy would not be able to survive. So I think really creating a path to legal immigration where we give those people a chance. And quite honestly, if you look, Peter, at the demographics of our country, we are an aging population. We need those people to come in here, pay legally into the Social Security system, which quite honestly is bankrupt right now, for us to be able to continue to grow. We're an aging, slowing economy, and we need those type of people to come here with new ideas, energy, spirit, that are willing to work, willing to pay into the Social Security system for us to remain a leader in the world.
Another major bit of news I've received this week, and is a industry that I'm very vested in, which is the oil and gas industry. And you know, the suspension of the Keystone Pipeline. What is your take on that, and what impact that's going to have not only in the economy, which we still very heavily vested in the oil and gas industry in the U.S., having some of the major reserves in the world, but what impact is it going to have in the relationship between Canada, Mexico, in the U.S., and of course the impacts to the economy and our standing worldwide in that space?
Well, you know, one of the things is we become a net export, and you know way more than I do about the oil and gas industry, but we become a net exporter of natural gas. We're, you know, almost, you know, energy self-sufficient, which has been a huge issue for our country for a long time, relying on places like Saudi Arabia for our energy. That creates risk, political risk, that creates the risk of war, all those types of things that we've been concerned about on a geopolitical stage, not being energy insufficient. So from that standpoint, what I would also say is there are, when we talk about this economy that needs to evolve more into this service, entrepreneurial type economy, some of the highest paying jobs, as you would know, Peter, in the country are still in that oil and gas space. So to eliminate jobs in the US at a time where we don't have a good replacement for those, you know, I think is a huge issue. Another concern of mine, just in general, on a bigger macro picture about oil and gas, and why we've actually been over the last year investing more heavily into some of the oil and gas names like Chevron, some of the ones with the cleaner balance sheet to be able to weather the storm, is, as you know, the dollar is very specifically tied to tangible assets like oil and gas. And so as the dollar comes under pressure, you will see the price of oil tend to rise. And so I think in terms of those assets today, they're going to become more and more valuable because, you know, talking about this new administration, we saw a huge stimulus plan put into effect last year. The current administration is talking about doubling, maybe even tripling that, also talking about a huge infrastructure bill. Well, to run heavy machinery and all those things, I don't think that's being done on electricity. You need oil and gas to be able to do that. So I think anything that hinders our ability to continue to rely less on foreign sources of energy is not something that I'd be supportive of.
Yeah, and just to piggyback a little bit on your point, you know, I'm all for pro clean energy. I'm all for new technologies, but we also got to realize that a lot of the new clean energies, there's a transition period, and we're 50, 60, you know, maybe 75 years out to be able to take all those automobiles out of, you know, out of the market that are still consuming gasoline or diesel. There's a major transition period, and there's many countries that depend on the U.S. for sustainable energy. Another topic that I think I find very interesting, and I would like to get some feedback from you, is what do you think the stance of the current administration is going to be on the cannabis industry, an industry that has really blown up in the U.S., but yet we still have some issues with the banking industry at a federal level, and we still have some issues with the decriminalization of marijuana.
Yeah, no, it's a great question. I was actually on Fox last week talking about this very topic in terms of under the Biden administration, what are some of the areas, sectors that are going to be favored? And so one of these things, you know, we're looking at right now, honestly, you know, cannabis is one of the, you know, a lot of the entrepreneurs I'm talking in my business today, in one way or another, are really moving towards that industry. You're seeing a lot of multimillionaires being made in the industry, but it still is a very kind of, you know, backdoor type of operation. You can't open up, you know, a legal bank here in California. Obviously, there is legalized marijuana. We're hearing that, you know, that it's going to spread a little bit more through other states. But I think the biggest thing, if you look at Biden and you look at VP Harris and you look at their stance previously on marijuana, if you've looked at Biden, he's continued to soften his stance publicly over the last year, 2 years. There was something called the MORE Act that actually moves to legalize marijuana that VP Harris was actually supportive of. So I personally think it's just kind of like prohibition. It's a matter of time before marijuana is fully legalized, before you see these companies able to open up a banking system. At the end of the day, you can't really have states like California legalizing it, other states criminalizing it. And at the end of the day, like I also said, this country is in a big problem, issue, deficit when it comes to our social security system. And instead of just raising taxes, which we obviously know would slow down the economy, this is a very viable industry that if we legalize it, I think could be very beneficial to our economy. So I do think that this administration is going to have a softer stance. I do think in terms of an investment thesis, the cannabis stocks, when you look at some of the publicly traded names like Canopy Growth, which is one of the largest companies out there, have been under some pressure over the last year, year and a half. But we're starting to see those bottom. And I do think under this administration, you will see some positive move forward for that industry.
What is going to happen, Rob, in your opinion, once we have some easing up on legislation in that space? Obviously, that is a space they had, and you said it correctly, has made a lot of new millionaires. There's a lot of people that have invested in it, and most of them have. It's a relative new space where the Philip Morrises have not entered. The major players have not entered, and for obvious reason, primarily the federal law that impacts the regularization of that industry or the lack of. What impact is that going to have on the small to medium business owners when the elephant comes in the room?
Yeah, I mean, that's a challenge. And I think it's really, if you look at the technology space as kind of a model for how the US economy has gone over the last 20 to 30 years, it used to be, I started in the market in the 1990s where it was still viable to bring a company IPO as a small billion, even sub $500 million company to the NASDAQ, to the NYSE. When Amazon went public, I think they had like 200 employees or something like that. Very, very small companies. But what's happened over the last 10, 20 years, when you look at, the big horsemen out there like Google, Microsoft, Amazon, Facebook, they so dominate their breadth, their scalability, their ability to, monetize any idea, look like what happened with WhatsApp and Facebook. It's very difficult today to build a small technology company that's going to compete on its own. So what happens today, and I deal with a lot of entrepreneurs here in Silicon Beach that are in that space, the thesis almost today for starting a technology company is really, what can I do to create one of the spokes on the wheel of Amazon or Google or Facebook, that I could set something up that eventually we pass the baton on them. I have an exit strategy to Google or Facebook or someone a little bit down the food chain for them to take this to the second, third, fourth, fifth, or sixth inning. And so I think that's the issue, right? Is that once you legalize this and you have the breadth and scope of like a RJR, a Philip Morris International, and these monsters can come in here with their buying power, their supply chain, and distribute this at a much lower cost, much more efficiently. Obviously, when it's legalized, one of the challenges too to small businesses, which actually we saw under the Trump administration, there was a lot of deregulation. Well, I think under this administration, we're probably going to see a lot more regulation. What regulation is, unfortunately, is the silent tax. There's a lot more cost that goes into doing business. And so if you talk about the legalization of marijuana, just think about the additional regulatory hurdles that are going to be put into place, the additional legal costs and everything, which are going to make it very, very difficult, even for the small incumbents, let alone somebody who's trying to start up something in this industry today, to be able to be challenged. So I would say if you're in that space, make sure it's extremely niche, that you're able to provide something to one of these larger buyers to take to the next level. I think in general, legalization is not the best thing for the smaller players.
No, I completely agree. It squeezes them out of the market. Now,
Yeah.
there's the other side of the coin there. When we do have the major players that come in, and I'm going to give the example of Amazon or Walmart. They create a incredible amount of scaling jobs and opportunities in the marketplace that a small business can do. So and that's often not talked about by the small business person, right?
Right.
It does have a direct impact on neighborhoods and direct impact on the infrastructure of a local community. But the overall impact in creating jobs and creating wealth and creating a sustainable economy is much greater than the impact that it does to the small businesses. You touch a little bit on social media, and I am baffled by Clubhouse, and I am baffled by their their recent raise of $1 billion. Okay. Something almost unheard of, many years ago. Today, $1 billion is $1 million of 20 years ago, 30 years ago, right? Where do you think that space is going, and what impact is social media going to have on this administration? Okay. Because obviously, in my opinion, and this is just my opinion, not trying to offend any of my listeners, there was a lot of control and from all types of media to control the message of former President Trump. What impact is that going to have? Is social media going to have in the current administration? And is it censorship, or is that a myth?
Yeah. Well, there's a lot of great questions there. So let me try to tackle a few of them, and I'll probably start with which I think would be the quickest answer on censorship. That's probably the $1 million question. It's very challenging because if you're a company like Facebook, you're a company like Twitter, it's not an easy decision, obviously, because when you're doing anything that even remotely resembles censorship, that tests and the underlying fundamentals of what our country is built on, which is free speech, obviously. So when you start to do that, it's a very slippery slope. That being said, if your platform is being used as a way to promote criminalization and violence and hatred, as a large corporation, like you said, these are people who are responsible for thousands and thousands of jobs and are essentially the media of today. What obligation do you have to do something? So I don't know that I'm really qualified to give a specific answer on that. I think the way that they handled it, quite honestly, was okay. I know a lot of people bailed off of Twitter because of that in particular. That was a platform that had a lot of Trump followers and supporters, but I think they did what they had to do. I think doing nothing was not an option. So, like I said, I'll kind of punt on that question. I always err towards the side of free speech, but that's why these guys are paid, hundreds of millions of dollars as CEOs of that large organization to make those difficult choices. But what I will say, and you mentioned Clubhouse, and you're the one who actually I heard about Clubhouse from certain people, and quite honestly, I was thinking, like, why are so many people asking me about Clubhouse? It's like some kind of Ponzi scheme where they're going to want me to get into some network marketing type of deal. And so when you mentioned it to me, I'm like, well, Peter's a credible guy. Let me look more into this. And so I got onto it, and I think I got onto it maybe 2 weeks ago from you. And so what I done actually is I've replaced my morning workouts listening to rap music to listening to Clubhouse now, and so I've been a silent listener for a couple weeks. I haven't really got into there, but I'll tell you, it's an extremely disruptive platform for a lot of things. The traditional education system in general, you're getting a lot of very smart people who are offering a lot of very good advice there. It's extremely different from a standpoint of when you talk about social media, Instagram, whatever those things are, you present what you want. But when you're called up live in a room on Clubhouse, the rubber's going to hit the road, whether or not you're able to articulate a strong value proposition, if you can go back and forth. And so I really like that. The question is, as it grows, I feel bad for some of these moderators, and I don't know, maybe they have some professional moderators in there right now, because I think they're doing a really good job. There's going to be some challenges to get on people who just want to hear themselves talk or not providing great information. But in general, I think it's a huge platform. I've done a lot of work in private equity. What also kind of validated, it was the Peter Estevez, and then the secondary thing that validated the longevity of Clubhouse for me was Andreessen Horowitz, who's on Sand Hill Road up in Silicon Valley. I've spent some time with them in their firm, and they don't invest in crap. They're very, very smart guys. So for them to put that kind of money into Clubhouse, I think it definitely has a future. But in general, when you talk about Clubhouse versus Facebook, Instagram, Twitter, they're all extremely different platforms, right? And so I think there's definitely room for them, as you're looking today to market, to monetize your brand, your business. I think you kind of have to be in tune with all of those, just like radio, television, news was before. It's now the different social media platforms that are becoming there. I have a 13-year-old daughter. She doesn't know who Tom Cruise is, but she could tell you every YouTube star that's out there. So this is just the way to monetize your business tomorrow. Whether you're 45, 75, or 25, you have to be there and taking time to understand these platforms. But again, back to what I was saying earlier, the ability to be an entrepreneur and compete on a global scale, the tools have never been better for you to be able to do that. And social media really creates a voice and platform for people like I've never experienced. And I've done traditional media for about a decade now, Fox, CNBC. I've been on Instagram for 6 months. Our ability to monetize our information on Instagram, the feedback that we've gotten right away, I'm just astonished. I was a total non-believer of wasting my time on Instagram. And now if you follow me, I'm on there 2-3 times a day because I actually think it's more important. And I actually just the organic posts I do get more following than some of the stuff I do in Fox and CNBC. So it's social media is just changing the world.
Because you're actually building a following, you're building credibility with your audience, and you're connecting directly. You have control. They're your audience. They're not CNBC's audience. They're Rob's audience. And to your point, I actually think you would do really well in Clubhouse. I see those rooms as masterminds. I see a lot of those rooms as a Coachella, a Southwest by Southwest. They're true intellectual curated in a way that people with incredible talent, incredible communication skills can do really well. And you have incredible communication skills, I think, and your wealth of information, I think you would do really, really well in that space. I think you ought to consider opening up a room and giving this type of information, which is very much needed, Rob. Rob, let's we're about to wrap up, but I like to hear your financial outlook for the next couple of years. And I know that is maybe an unfair question, but you have a pulse in the market. You know what's going on. You've been at it for a long time. You're a very credible individual, well respected in the industry. Tell us what you think the financial outlook is. What are the bumps and the ups and downs that we can expect in the next couple of years?
Yeah, well, I think that the best thing to do is really, so I run a wealth management firm. It's kind of my full-time job. Collectively, we're owned by a publicly traded company. We manage about 138 billion in assets now. And so I guess the value when someone asks me that question is, I don't have the luxury of like grandiose predictions, or I have to put real money to work every single day. I personally manage a portfolio that's hundreds of millions of dollars. And so what I can tell you is what we're doing, how we're positioning ourselves, some of the risk and opportunities I think will probably create the greatest value. One of the things today when we look across the scope, and we use something called game theory in our investment strategies to kind of look at all these different scenarios that could play out. And it's never just one thing, right? We could have runaway inflation, we could have deflation, we could have interest rates spiking, we could have interest rates considering to stay low, we could have this virus done in 6 months, we could have it continue to get new strains, and it becomes a bigger issue in the last 6 or 7 years. If you're not planning for all these different things to come, and you're just focusing on one singular outcome, that's usually, as an investor, where you will get run over. And so what we're looking at right now is a few things. Number one, the most difficult thing I think about investing today is whether you look at commodities, whether you look at value stocks, growth stocks, real estate. We deal with collectible automobiles, sports cars, just about every asset class you can invest in, fine wine, I'm involved with in one shape or way or another. fine art. There's never been a time where I've seen it so difficult to point to that one, two, or three assets and say those are really, really undervalued. They're really cheap. Everything across the board right now, I would say, is fairly valued to overvalued. Okay. And the way we come up with that assumption is we look at valuations based off of historics. So if a stock usually trades at 10 times its net earnings, well, today it's 11 or 12 times or 13 times earnings. And then you can go on and on, from real estate to automobiles and everything. Everything's a little expensive. That being said, there's no huge bubbles out there. And so the question is a couple of things. Number one, what will cause assets to move higher? Well, a few things could cause assets to move higher. Obviously, if you look at stocks, for example, which I deal a lot with, well, you're saying valuations are expensive based off of historic, and that's based off of what they're earning today. But is there a catalyst that could increase earnings to where these valuations don't look too expensive? And so what I would say there is what we really need is twofold. Number one, we need the virus to get put away pretty quick. If we start to see this go into the third, fourth quarter of next year, I would say the sustainability of the stock market, the sustainability of a lot of things. You look at housing, for example. I just read today, 20% of people are behind on their rent. The sustainability for these things to continue to get buried and put over and valuations to remain high, if we don't open this economy back up pretty soon, is a big challenge. And I think we're going to have some issues if we don't do that. The other thing that we're looking at, quite honestly, is interest rates. If you see interest rates start to tick up, that is going to be a huge problem for the stock market, a huge problem for real estate market. There's something called the risk-free rate. So anytime you invest in anything, any of the assets I mentioned, you always look at what the US government bond is going to pay you on a 10-year basis. Today, they're paying you about 1%. When I started in the market in 98, it was about 7%. So you remember, Peter, in 2000, the stock market crashed. Well, because 7% was given to you to take no risk. So why would I take a lot of risk in the stock market that was highly valued? Well, today it's only 1%. So that hurdle is much easier today to clear. But as that goes up, ticks up, that challenge of other assets not being quite as attractive is going to be an issue. Also, when you look at what's happened in this economy, there's been a huge refi boom, not only to get a lower interest rate, but to take cash out, put that into the economy. If you start to see that slow down, it's going to be a big issue. The other thing I would say is we do need something to help this economy, like a stimulus plan, which I think we'll get, but that's short term. Long term, we really need something we've talked about in this past 3-4 administrations, is an infrastructure spending bill, creating real jobs that put people to work, that trickle down through the economy. We need those types of real things to happen. But what I would say is, there's some challenges I'm talking about out there. Putting your money under the mattress is not the thing to do right now, because I think the first time, I just talked about this on my YouTube channel last week, for the first time in a while, I'm starting to get a little bit concerned about inflation, because inflation has not been an issue because we put supply into the market but have not had velocity. Well, now that we're putting money directly into the hands of the consumer, and we're talking about doing more and more of that, we're going to start to see that become an issue. Also, we can't, we're a global economy right now. So if the rest of the world heats up, we can't necessarily control that. I'm also concerned with the fact that I think the dollar is going to continue to be under pressure. That's why you've seen things like Bitcoin start to rally to where, okay, you're talking about, fueling, putting more and more money, but nothing sustainable to be able to support that. People are really worried about fiat currencies. And so the last place I want to be right now is sitting in a dollar or having it under my mattress, earning nothing if the price of things are going to go up. That's why, in general, assets are continuing to rise. But I would say don't reach too far out on the parameter. Don't go chasing stocks that are just ridiculously valued or pieces of real estate that are valued. Do your homework, be diversified, have some in real estate, some in the market, some in commodities, some maybe in alternative assets, because I do still think that based off of where we're at today, you will see these assets move higher, at least for the next year, maybe 2-3 years. If the economy really ticks off, we get an infrastructure spending bill, the vaccine works and everything opens off, we could go much higher. So even though we've had a big run, I think the greater risk is not doing anything and staying in cash, because I think purchasing power erosion is a real thing that we could face.
Incredible outlook from Rob Luna. Rob, tell us about your philanthropic causes. I know you're a great supporter of your alma mater. What do you do there? How do you support the younger generation, the upcoming entrepreneurs and investors? And how can we support you? Support them?
Yeah, well, I have four alma maters, but the one I'm pretty active is with UCLA. I grew up inner city Los Angeles. Didn't really have the grades or money to go to UCLA, but as a grad student, I went there. They accepted me, thankfully. And I always say that education literally saved my life. I grew up. My brother got caught up in gang violence, and education was really able to take me out of that way, create a path for myself today. And so I support Anderson with people who don't have the financial means to be able to go to school, and I'm all for that. And I also support the Boys and Girls Club of Los Angeles, because these are also people that are doing a great job for kids who would otherwise be on the streets with their parents aren't home, to give them a solid foundation, put good mentors in front of them, and put them on a path that they might not otherwise see if those people weren't in their life. So anything that supports children and education, I'm all in, and I encourage other people to do that as well.
And tell us about the Rob Luna Academy.
Yeah. So the Rob Luna Academy, it's kind of a labor of love. So in my business, I've worked with what I would consider ultra high net worth investors, $5 million above in investable assets, which obviously the average person doesn't have. A friend of mine got me into social media last year, and a lot of people started reaching out to me, and I started understanding how bad the quality of information was. 99% of people do not have a financial advisor. And when you're just starting out with $10, $15, $20,000, unfortunately, the financial advisors that are willing to talk to you aren't the highest quality. A lot of times they're insurance salesmen and things of that nature. And so what I wanted to do, people were asking me, well, what book to read, is I wanted to create an online format that was affordable. I can create fundamental classes for people to go in and get a solid foundation of knowledge on. And then just next month, we're going to be launching weekly live Zooms, because I think once you have that foundational knowledge, just like today, whether you're an entrepreneur, which I teach entrepreneurism, and I teach personal finance and financial literacy, you need real-time information. Because if you're running a business and you weren't expecting COVID to happen, well, how do you pivot? How do you change to that? As interest rates rise, what do you do in your portfolio? What do you do for your business? So really, this is something, and I was a Wharton Fellow for several years, which is a lifelong learning initiative, where I really look at this as a lifelong learning initiative for people who want to gain control of their own financial future. They don't necessarily want to outsource it to someone, but they also don't want to do it yourself or just Google. They want a partnership, mentorship, and the same thing in terms of entrepreneurs. Our economy is not set up for entrepreneurs. We're set up for going to school, getting a job, and so everyone's going to tell you how crazy you are. There's no specific frameworks how to do it. And fortunately, I, like you said, started a bedroom. Not with $10, zero money. I had no money. I actually washed cars on the weekend, and I built that up to a multi-million-dollar business. Fortunately, I was able to sell, and I'm taking that same roadmap that I used, that I've learned through Wharton, Anderson, some of the top business schools in the world, and teaching that to people for less than an annual cost of less than one class at UCLA cost me. So I'm excited to get it launched. We just launched it a couple of weeks ago, and I'm hoping we can make an impact. Our vision is to close the wealth gap. And that's a very, very big vision. And the way we plan to do that is to provide mentorship and education for people in financial literacy and entrepreneurism to create their own financial future.
Incredible. Where can people find more information about the course, and where can people find you in social media?
Yeah, if they go to robluna.com, pretty easy, robluna.com, I've got everything on there. Most active right now on Instagram at the Luna Rob, but all that's on my website as well.
Rob Luna, thank you. Thank you. Thank you so much.
Thanks so much, Peter.